This is the Weekly Outlook. Thanks for joining us at xm.com. I'm Christina Marujos. With me today is lead investment analyst Rafi Boyajian. We'll be having a look at the upcoming week. Rafi, it looks like central bank action took a backseat to geopolitics this past week, and this theme might spill over into this upcoming week as well, with multiple ripple effects. But let's start by having a look at the only central bank meeting we have this week. The Reserve Bank of New Zealand meets on Wednesday amid speculation about not whether we will get a third rate hike, but whether it will be a 50 basis points one. Therefore, what will policymakers signal?
Well, Christina, it will be an interesting meeting because, of course, as you recall, RBNZ was rather quick in terms of exiting its QE program last year, and they soon followed that action. They followed up with two rate hikes, one in October, one in November. So there's a possibility they might raise rates by 50 basis points this time instead of 25 basis points, because although New Zealand still has some virus risk restrictions, in fact, they've got somewhat tighter restrictions than most other countries, they do have a very tight labor market. They also have a very hot property market as well. Now with the labor market, because of those restrictions, the fact that it's hard to travel to New Zealand, and they're not really seeing much immigration there at the moment. So that is, of course, exerting upward pressure on wages. But nevertheless, policymakers might decide to maintain some kind of a caution because the fact that they still have some restrictions means that the economic output is not quite near full potential yet. So the overall consensus is that they will go with 25 basis points. But should we see a surprise 50 basis points rate hike, that would definitely boost the New Zealand dollar quite significantly.
Let's stay in the region, cross into Australia, though. It will be reporting a barrage of data this upcoming week. We have flash manufacturing and services PMIs on Monday, followed by wage numbers for Q4 on Wednesday. How crucial will this data be for a potential rate hike by the RBA in 2022, and how might the Aussie move?
Well, the focus really will be on the wage price index on Wednesday, because the RBA has been talking for some time now that they want to see higher wages before they go ahead and start raising interest rates. And although Australia also has a pretty tight labor market, in fact, the labor market there has recovered quite strongly in recent months, the wage pressures have yet to show up in the data. So should we start to see that in next week's data, that could revive speculation about an early rate hike by the RBA, which at the moment the RBA has hinted that at the earliest that could come in the summer, but clearly stronger than expected wage numbers would see those rate hike expectations going to overdrive and potentially lifting the Aussie as well.
Let's cross into Europe now. The region has been plagued by war worries, of course, this week as tensions have yet to de-escalate. Therefore, volatility might be a theme this upcoming week as well. Can the euro move significantly on the PMIs and CPI data we're expecting, or will it rather take its cues from the Ukrainian standoff?
Well, the euro has taken a bit of a tumble from those heightened Ukraine tensions. Now, of course, markets have been gripped by those fast-moving headlines on Ukraine all week. We've seen the tensions de-escalate, escalate, and then de-escalate again. What we do know, though, is that the threat of an imminent war is still there, and it's looking like this could be something that could drag on for weeks. And the euro clearly has been pressured negatively from these risks because of Europe's energy crisis, which could worsen if Russia were to invade, and then consequently the US would slap sanctions on Russia. Europe relies heavily on energy imports from Russia, so if those imports were to become endangered or would put at risk, Europe could be faced with an even higher energy bill for consumers and businesses. However, there could be some positives for the euro next week from the upcoming PMI data, because we should see a bit of an uptick in economic activity in February as more and more Eurozone countries ease the Omicron-induced virus restrictions. So we'll see how much of a support that's going to provide.
And last but not least, let's have a look at the United States. The highlight of the week will probably will be the PCE inflation report, which is out on Friday, which might be another piece in the puzzle for the Fed's next move. Therefore, how important will this data be in regards of rate hike market pricing, and how could the dollar move?
Well, it's going to be a pretty busy week. The thing is now, even though we've had a lot of speculation about the Fed, if you look at the interest rate futures markets, it looks like the most hawkish scenario by the Fed has been pretty much priced in right now. So maybe that's why currency markets, as far as the dollar is concerned, hasn't really been moving that much from those, from the market chatter about what the Fed is going to be doing next. So next week's data could provide a bit of a boost to the dollar, because even from the geopolitical risks from the Ukraine tensions, there has been somewhat of a more modest safe haven flows going in the dollar's direction, as opposed to, say, the yen and gold. So in terms of the data, at the beginning of the week, the flash PMIs and the consumer confidence index will be watched. Now, these are out on Tuesday. Of course, Monday, US markets will be shut for President's Day. And then much of the focus will really be on next Friday, when we've got the PCE inflation data coming up, as well as personal income and spending. Now, after that, of course, very hot inflation print that we got for January. PCE inflation is likely to follow in the same direction. And the month-on-month pace we saw in the CPI numbers, it wasn't slowing down, and neither is expected to slow down with the core PCE price index. The month-on-month pace is expected to stay at 0.5%. And looking at personal consumption, again, very strong. Of course, in December, we saw a bit of a slump in consumption. It's expected to bounce back strongly in January. So all in all, we could see a bit of a boost for the US dollar, given that lately it's kind of been struggling for direction.
It's shaping up to be another very interesting week. Rafi, thank you for joining me today. This was the Weekly Outlook here at xm.com.